Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room. And what we're about to do is to trade the US Open. And today is Tuesday, the 13th of April. For those of you, just before we begin, for those of you that are genuinely interested in learning how to trade the financial markets, we can certainly help you as an organization. We have a whole variety of different products and services, all designed to turn you into a consistently profitable trader, and trading these markets from a position of knowledge and understanding. There's reasons why markets are driven and move in certain directions. We want to be in tune with that move and look to technically trade those opportunities. So it's a very coherent approach to trading these financial markets, very much in line and in keeping with your hedge funds and other financial institutions. So do feel free to go to a website. If you've got any questions, you can chat with us through the chat function there on our website. And like I said, we've got a large range of products and services available, catering for those that have time to trade during the day to part-time traders that only have 15-20 minutes every evening. So we cater for various different types of traders, and we've got our own unique style. So just go to the livetraderoom.com for more information, and we'll be happy to speak to you there. Okay, so over the next hour or so, we will be going through what we need in order to be prepared for some potential high probability trades. And we'll do this across some of the world's largest markets, from foreign exchange to commodities, and also the global indices markets as well. So we do have our Squawk, our live Squawk, which we're running along in the background. I've got a few different screens running here at the same time. So without further ado, the markets we're looking at, by the way, are your foreign exchange markets, your major markets, along with the euro pound, the euro yen, and the pound yen. So those markets do give us the vast majority of opportunities that we're looking for, and they're the most liquid markets as well, which is quite important. In addition, we look at commodities like gold and oil, and also global indices like US indices, S&P, Dow Jones and NASDAQ. And in Europe, we have the FTSE and the DAX, and over in Asia, we have the Nikkei. So we've got a multi-asset class view of these markets. So let's get straight into it then. We'll start with our risk warning, and let's see if we can make some cash during the session. So please see our risk warning currently up on screen. And the first thing we need to do when we trade these financial markets, and it's quite good practice for you to do the same, would be to just review any market moving news events that are likely to impact any of our trading decision making over the course of the session. And we're looking for high impact news events. So we're looking for your red factories currently up on screen, and we've got a CPI figure, core CPI and CPI, so it's an inflation-based figure, consumer price index, the rate at which prices are increasing for consumers. And it is only a monthly figure, so we wouldn't expect a major deviation from the forecast, 0.5 and 0.2, but we might still see some volatility around that period. Today, again, at 6 p.m, we do have our 30-year bond auction. What's interesting to note from this time yesterday is we've seen a slight uptick in bond yields. You'll probably keep hearing about it in the news. The equity markets are very sensitive to the yield curve, and from yesterday, we're seeing a gentle uptick from sort of 0.65 up to 0.68. So it's a slow move to the upside, and we're currently at the 68.4 level, so 1.684%. And this is the 10-year Treasury note, so take note of that. And we want to see, you can see there's a gentle uptick from this 163 level, and that would be a concern if rates started to shoot up unnecessarily. We had a 10-year bond auction yesterday, which seemed to go relatively well with significant demand. And we've got a 30-year bond auction as well. We're anticipating a higher rate of 2.3%, just largely because you're tying up your capital for 30 years. And you'll get that back with a 2.3% interest rate on that, with the 2.3 being the demand for that note. So you can see here that the demand had been higher previously, 2.5, 2.5, 2.3. So we're in that sort of range really for the 30-year bond note, and it'd be interesting to see if we see a deviation.
The Spanish Prime Minister
it's also worth noting
funds are to boost GDP in the country by 2 points per year, also to create 800,000 jobs. Okay,
we'll come on to that in just a moment, but you can see that the actual prints for these 30-year bond notes were much lower than what we're expecting now. So this is this uptick in yield curve we're talking about. If we go back to November, it was 1.68 and now we're at 2.3. So a significant uptick in that. So that's at 6 p.m. So the only major news event we'll just be mindful of is the CPI data out at 1:30. Okay, so let's get straight into these charts then, and we'll see what opportunities we have. Just looking at some of the... Oh, excuse me. Sorry, I clicked the wrong button there. So we actually had the euro dollar just there. We'll put the euro pound just in here. Sorry about that, just bear with me just a second. We had the S&P just in this corner. We can see a little bit of softening, not much softening, but just a little bit. I mean, we still made an all-time high today, so that's quite interesting. We had the Dow Jones just sitting in here, just so we can react to what's going on in these markets in real time. And we had the gold market. Very interested to see what's happening with gold. Okay, apologies for that. So we'll come back to these in just a second. Okay, we'll come back to that in just a moment. So yesterday we were looking at a euro dollar buy trade above the 2-day high, which is now the 3-day high basically. So we're looking at yesterday's high and the day before. So we're looking at a breakout to the upside of the 119.19, and this is the narrowing of price action that we talk about all the time. It's a bit painful to wait for these opportunities, because you get some inside trading, you get lower highs and higher lows. So you've got this narrowing of price action, as you can see. What we like about this is you often get a really nice breakout of these levels from a technical perspective. So whether it pushes higher or pushes lower, it doesn't really matter to any great extent. We're getting this narrowing, and we're just being patient and just waiting for that opportunity to reveal itself. So we're looking for that buy above 119.19, so that can still remain the same. And look at the euro pound. We're getting a little bit of a bounce back. It's really struggling to break below that 86.38 level. Even in the last 2 hours, 3 hours, let's say, we really struggled to break below that 86.38. So that was our interesting sell trade in this market, and it's failed to follow through. So now we're just bouncing off that level. And if we look at it on the bigger time frame, as long as prices are above the 86.38, you would expect, further uptick in this market. And we saw a double top yesterday. We've got a double bottom now. So yesterday, your bias would have been actually probably to the downside marginally. And now, if we break this little high in here, it would be back to the upside. So for all intents and purposes, if we just look at price action really over the last, since the 7th, which is Friday, we're pretty much drifting sideways actually on the euro pound. If we look at the euro dollar versus the pound dollar, you can see that the dollar is strengthening mildly against the euro, and we've seen a strong rejection to the upside yet again in the pound dollar. So there's still very little appetite for that pound as things currently stand. So today we're seeing a little bit of dollar strength, and prices actually rolling over a little bit to the downside. Hopefully that's good news for our capital growth trades where we trade daily timeframes. So we're seeing multiple rejections of those highs. There's one, there's two, there's three, there's four. And really what that allows us to do is actually prepare for the next leg to the downside. Now the only difficulty is we've got two rejections to the downside. So you got 4 to the upside versus 2 to the downside. So there's only a marginal bias to the downside, and the high probability trade is a break of this level in here. That's your high probability trade, because market is coming from top left to bottom right, which signifies a downtrend. So that's what we want to know. We want to get on side with the trade. We want to know exactly what it's capable of doing, and for now our bias is still to the downside for this trade. It's not quite a high probability sell trade just yet, because there's still numerous levels of support just below these current prices. So these are all levels of support, just to signify. So every potential for this market to maintain a push to the upside. So we're really looking at that breakout 36.69 to capitalize on the high probability trade to the downside once that is the case. So looking across these dollar pairs, we've got a bit of a narrowing of price action with the euro dollar. The pound looks marginally weaker now. The opportunities over the last 4 days are really not fantastic. We want to see breakouts of these levels, either to the upside or to the downside, and the dollar yen for now is just not really doing anything just yet. We've got a potential buy trade, strong level of support. This is on the daily, of course, so price is pushing higher. Yesterday we couldn't really get into a buy trade just yet, and actually today we can't either. But if we take note of the high and we get some continuation tomorrow, then that's potentially your buy trade. What we'd be mindful of is a head and shoulders. So you'd be looking at a buy trade from the 92.69 up to the 93.75 level, and then you just be mindful of this level up here, which is a classic kind of head and shoulders pattern. So we shall wait and see. And what you're looking for is symmetry in those patterns. So we'll see if we get, like for example, to the downside. This is not a bad head and shoulders to the downside. So you're getting that sort of peak, and then you're just getting that reversal signal. So it's that trade that would be interesting to us. You got a bit of an uptick, and then you get the pullback to previous levels of resistance, which now becomes levels of support, and then you get that next opportunity to the upside. So that's how we read these markets. I suppose it is like reading a book, so to speak, and you're just anticipating what's going to come next. Really, that's the key to it. Okay, dollar Swiss. Okay, we'll have a look at Bitcoin now in just a second off screen, because it's had a really nice move today. Dollar CAD, it's showing it's a little bit more aggressive than perhaps the others. We are in this sort of sideways moving zone, so the high probability trade kicks in at a slightly higher price.
Now from the White House economic advisor, the White House is taking any issue of the Johnson & Johnson vaccine very seriously, as they're currently speaking on CNBC Bernstein.
A close below the 126.26 is probably then a trade worth looking at. There's lots of traders that will be buying and selling inside these ranges many times. We don't do that. We sort of look to trade on a hierarchy basis, and where we prefer to focus our energies on what we refer to as high probability trades, and not just trading every single signal that pops up at every opportunity. So that's the dollar CAD.
Vaccine news here, looking to AstraZeneca, as Denmark seeing a plausible link between AstraZeneca vaccine and blood clots. We're looking to Spain and PM Sanchez saying the government wants no extension of the state of emergency beyond May 9th.
So we're still within this little zone, little sideways moving zone between the 76.64 and the 75.85. So you're talking about an 80 pip range really, with a strong breakout to the downside. So we need to see some confirmation that prices are going to break, and we're just not seeing that right now. We've got this little sort of mild bullish bit of price action here, but price action over the last 2 weeks has been nothing but sideways. So again, it's waiting for some stimulus that's likely to impact these trades and begin to push them further to the upside. So the level that would be interesting to the upside for the euro pound would actually be above the 86.69, and we're not too far away from that. We probably were just 2 or 3 pips away from breaking those highs. On the daily time frame, pure indecision. That's what these 3 candlesticks represent. You know, it's a very mild pullback, probably before we get the next leg to the upside. So perhaps that's worth looking at. The euro yen, I'm sorry to say, but these markets have just drifted into this little sideways pattern again. 2 weeks of sideways moving price action, so not ideal. This is why patience is one of the pillars we believe every trader needs to develop. There's some markets that are really explosive and just gives you multiple opportunities in a very short period of time, and there's other markets like these that really don't give us great trading opportunities. This is the pound yen. Recent price actions working like so. So will we get this next leg, or will we actually get this little rollover further down to the 148.48? So these are the questions we've got in our minds. At the moment, we want to let price decide. We don't want to trade with what we think. We want to trade with what we're looking at, and we can see that there's a couple of rejections to the upside. We can see that the momentum is clearly to the downside. This is when you get volume, price and volume moving in a certain direction, clearly lower. We've got the monthly high in here providing a little bit of resistance.
Just be aware we'll be hearing from the US FDA today. They'll be holding a media briefing on the COVID-19 vaccine, said to be taking place at 10 a.m. Eastern Time. That'll be 3 o'clock London time.
If you said to me, hold on a minute, there's 3 potential rejections of the lows, I would say, well done. You're actually describing a genuine level of support and resistance. So what does that mean? It means we can either get a move to the upside, or prices will clear these levels and we'll get that little continuation trade to the downside. So that observation would be absolutely correct. And it's these periods of consolidation which is what we really do look for. We want to see prices just doing this, and then we can prepare ourselves to the buy trade if we get the correct conditions, or in this case, you'd probably be looking for a short-term sell trade based on this candlestick. And the same is happening here, except we're only sort of 2 or 3 days into it. And like I said, there'll be lots of traders getting in over the next 2 or 3 days, buying and selling, and all they're trying to do is trade low probability outcome trades. And our focus is very much on identifying the conditions we need to capitalize on a high probability trade, and that's the difference. And the reason why we might get a short-term buy trade is because we are trading what we're looking at. We're literally trading a bullish market, and we're currently experiencing just a pullback. So will this market extend and make new highs? That's what we would prefer to do, but what we can do as traders is we can assess the fundamentals, and we can see, right, well, is there a positive sentiment around the pound? The answer is no, not really. It looks like that the pound has benefited significantly from the vaccine rollout over the last 6 weeks, and it now looks like that is coming to a little bit of an end from a sentiment perspective. So it is important to take that on board. So would we be surprised if we zoom in? Would we be surprised if this actually creates a bit of a floor here and then breaks through that floor to the downside? No, we wouldn't, because we'd be looking across these markets and see how is the pound performing against the euro. Well, it's selling off significantly against the euro. How's it performing against the dollar? The dollar is, in the process of strengthening against the pound. So would we get a high probability trade in the pound dollar below the 36.69? Probably. And if it does break below that level, we're selling this market. And that would be much more important in this trade, because this would be a very significant structural failure to the downside. So that's when all of these buyers, they suddenly start panicking when they see these breaks of these levels. That's why you get these little sort of 1 or 2 day explosive moves, is because they're liquidating their buying positions, and they're literally, the psychology of this market begins to shift if prices break lower. And that's what we look for. We look for these changes in psychology in these markets. And when we talk to traders about psychology, it's not just your own psychology you have to deal with, it's the psychology of others, the flow of capital. Where is the capital going? What direction is it pushing prices? And which markets give us the better opportunities? And that's really what profitable traders spend their time doing. So very easy levels to see and identify, and we become sellers below the 136.69 until the market tells us otherwise. So I hope that makes sense. If it doesn't, feel free to ask any questions, but and you'll see us do this day after day, during this live trade room every day. So if you can join us at 12 live, at 12 p.m. UK time, live every day. Now, we're not running this session every Friday at the moment, but we will be relatively soon. So it'll hopefully help you with understanding what you're doing. And that is ultimately the reason why most traders fail, is because they don't really understand what they're doing or why they're doing it. So they're guessing. It's like walking into a casino. It's literally putting your money on red or black. You know, it's pure chance. Whereas if you can stack the odds in your favor by doing your analysis and being well prepared, then all of a sudden you're shifting the control on your side, and you develop trade ideas and you look to execute those trade ideas. It's not necessarily being told about, you know, buy at this price, sell at that price. It's about understanding what's happening. And for some markets, we'll take a small win or a small loss because something has changed. So we want to get out of that position. There's other markets where you get the technical buy trade, and it's very much supported by a very positive sentiment in that market, and the fundamentals are good and positive. So in situations like that, you look to let that winner go, look to let it fly, and that's where you can see a significant uptick in your P&L in a relatively short period of time. Okay, so I digress, and we're 2 minutes away from the open. So many of these markets, as you can see, and as we've been explaining, are very much sideways moving. So that creates a bit of a problem for us in the short term, i.e., you know, it doesn't create fantastic opportunities for us just yet. But it does mean that there's a number of very, very good, high quality trades in the pipeline. These markets always break out of these ranges. Again, the pound yen, it's drifting in a sideways pattern. Gold was attempting to kind of bounce off this level of resistance. This is your strong level of support and resistance on multiple occasions. So it's, if prices are pushing down, it's a level of support, and when prices break through, they generally bounce back to those levels, and then that level of support becomes resistance, and we've got resistance again at these levels. So support and resistance allows us to sort of navigate these trades and hopefully stack the odds in our favor. So we can expect a bit of short-term selling. We've got the monthly low just sitting right in the middle of this level, so not ideal. What we can do is we can move those levels. Sorry, I deleted our green line, so let me get that back. And there it goes. So the 152.73 is the monthly high, and the 148.04 is the monthly low. So as you can see, price has bounced off the monthly high, and we're now heading back down towards the monthly low. So it is the reason why we're currently selling the pound yen on the daily time frame. But we're just, prices are being held up at these levels, and we're just waiting patiently for the next opportunity lower. So pound yen, so gold. Very little opportunity there. As you can see, crude oil been drifting sideways now for 6 days. In fact, we could extend that out a little bit. If you look at price action over the last month, you know, we're pretty range bound between 61.81 and 58.80. So there's a $3 sort of range that this market has been moving in since the 19th of March, and we're now the 13th of April. So talking about 3-4 weeks of just sideways moving price action. So that's fine. If these markets are consolidating, then they're consolidating, and we just need to prepare for the opportunities, because when they come, there'll probably be multiple opportunities that we'll take advantage of in a relatively short period of time. So what I can do is I can just change these monthly highs and lows. Okay, so that's the S&P 500.
Geopolitical news there as well, seeing Interfax reporting that Russia is taking measures in response to threatening military action by NATO.
That conflict is bubbling away in the background, Russia versus NATO.
The Russian army will be completing readiness checks within 2 weeks.
It's obviously a bit worrying, could escalate pretty quickly. So the indice markets are just trading. You can see the bullish move, and we're just trading up at these highs. So with the increasing 10-year note, which we've got a 30-year bond auction this evening at 6 p.m. Sorry, if I just bring up the 10-year, we can see a slight uptick in the bond yield since this time yesterday, from approximately 163 up to 167, 168. So a little bit of an uptick in yesterday's trading, as you can see on screen. And we've got a 30-year bond note due out at 6 p.m. So we'll see how that shapes up, and we'll see how it impacts the yield curve, and as a direct result, it'll have a direct impact on these US indice markets. So they're going to be very sensitive to very sharp increases in
Interfax piece on
bond
Russian
yields.
Military strength said they will be strengthening the northern fleet to counter threats.
So let me just look at this on the monthly just quickly. So actually we're very close to all-time highs, but the monthly high was way back here, and we had a strange sort of 2 or 3 month period in the Nasdaq market, which benefited so amazingly from the actual reality of the COVID lockdown situation. So obviously, as more people are indoors, especially over the winter, they're reliant more on technology. That begins to shift. Once economies start to open up, people can go out and socialize a little bit more and access much of the service sector, hotels and cafes and bars and things like that. Once all of that starts to come online, people are less reliant on technology. So the Nasdaq has taken a little bit of softening as a result. And we're seeing a bit of an uptick in real markets like the S&P and the Dow Jones Industrial Average. So as industry starts to come back online, you'll start seeing an uptick. Plus we have Biden's recovery fund. So he's given the next installment of $1,400 to every American to basically go out and spend in the real economy, and that has a direct impact on many of the companies in the S&P, and also the Dow Jones Industrial Average, with the potentially $2.2 trillion infrastructure fund, which is currently being debated. So all of that will be really positive for markets like the S&P and the Dow Jones. So it's just bouncing off these all-time highs as things currently stand. Just want to just amend these monthly highs and lows on this platform.
Chinese Premier Li commenting that decoupling of China from the US benefits no one.
The 50 period there, moving average on the monthly time frame. So we've got some intraday trading in the FTSE. The DAX is, we've got new all-time highs up at this level. So there's your sideways moving markets in the DAX. Obviously, I feel like I'm, repeating myself, which of course I am. A bit of intra-month trading as far as the Japanese yen is the Nikkei is concerned. So that's when you look at it on smaller time frames, you get sort of
further from Lee saying that China and US should maintain stability of supply chain.
You get marginal lower highs and marginal lower lows as well. So as you get this tightening of price action, we're really looking for the breakout to the upside, or of course the breakout below the monthly low. So the monthly lows, the monthly highs and lows in the Nikkei are actually really important levels in this market. And then Bitcoin, we're now seeing a new all-time high in these markets. No, we probably shouldn't be that surprised, really. So we've got the 62,977, so close to the $63,000 level per Bitcoin, and it's probably not going to be stopping anytime soon. Bitcoin for us is one of those speculative sort of long-term trades. If you buy some, you want to perhaps get into it and look to hold it for long term. Almost forget about it because you're gonna experience some very, very wild swings in these markets, and you probably don't need to be witnessing the downside pain when that arrives. At the moment it's very, very bullish and everyone's having a great time. That can change in a heartbeat with this, these cryptocurrency markets. Plus, many central banks are bringing out their own digital currency as well, so there'll be, I suppose, other competitors entering this kind of space. There's still plenty, there's the adoption for Bitcoin has been really quite impressive, and the market cap has been exponential. So every potential to continue its move higher. You see, even recently, we this shows you how volatile this market is. So on the 21st of February, this market got up to nearly $58,000, and within 2, 4, 6, 7 days, we were down at the $43,000 level.
Johnson vaccine news from the FDA, as CNN and Keelan Collins is reporting that all federal health channels, mass vaccination sites, and community health centres who were previously administering the Johnson & Johnson vaccine will be immediately stopping. This comes from a federal health official.
So that's a $15,000 drop in the space of 7 days. Percentage-wise, I suppose you're talking so 25-26%, is it? Something along those lines. So you've taken a pretty significant hit in a very short period of time. And that's assuming that you're not trading these markets with leverage. If you're trading with leverage, you've probably burnt your account, we would assume, with margin requirements. So that's how deadly trading Bitcoin with leverage can be.
The comments from Chinese Premier League that there is mutual need for China-US trade cooperation.
Okay, so we're left with markets that are really not great. They're all trading at very important levels of support and resistance. They're failing to give us a direction to work with just yet. Very well may change, but as things stand, so we're squeezing up higher. I think I'll put that level in. So there is your. So we're only 2 pips away from actually a very significant structural failure to the downside. Excuse me. Let me repeat that. A very significant structural failure now to the upside. We've just experienced one to the downside, and now that there's your psychology shift. That's when all of these sellers that are looking to push prices lower, this is when they really panic and they want to liquidate their positions, and generally you'll get an explosive move to the upside. They're almost, stress points, psychological stress points in these markets. We refer to them as structural failures, but that's really what they are. So the only market that's really moving to any great extent is Bitcoin, and we don't trade Bitcoin. It's far too volatile. Okay, it looks like it's going to be one of these trading days. So we revert back to the euro dollar. It's not really doing much. Still looking for that potential buy trade above the 19.19. We're not getting that just yet. There's a high probability sell trade below that 86.38. This is why we use these levels of support resistance, because it means we don't, we haven't got into this trade and experienced a rejection to the downside. We're only interested in selling if prices break below strong levels of support, not if they're above them. So S&P is just trading up very close to those highs. The Dow Jones there's a little bit more weakness in the Dow Jones than there is in the S&P. And we've got a significant amount of indecision at these levels. And in fact, breaking above the 1758 is a decent buy trade, but it looks like we probably won't be able to get into that till tomorrow. So as a result, we'll wrap it up there.
10 minutes time now to the bottom of the hours. We await the release of the closely watched.
Okay, so we'll pack it up there. We do have crude consumer price index data due out. It's very much, we'd expect it to be pretty close to the forecasts. So CPI figure monthly of 0.5%. Core CPI is expected in around the 0.2%. So we're looking for the deviation of this. If these are both negative figures, then it'll impact the dollar negatively. If they're marginally positive figures, then we might see further upside in the dollar. So you can keep that in mind. And it might be worth just keeping an eye on the 30-year bond auction at 6 p.m. and more importantly, see how that impacts yield. So we'll discuss it in a bit more detail tomorrow. So it's definitely looking like we're getting a small uptick in yields. So on that note, thank you very much for joining us as always. If you do want any help and support trading these financial markets, do contact us. Go to our website, and we'll be happy to interact with you there if you've got certain questions about trading these markets. And we've got a whole range of products and services available for you, all at very, very affordable cost. It's a small monthly payment. So go to our website for more information, and we'd be happy to speak to you there. So from everyone here at the Live Trade Room, we'll be back again tomorrow at 12. Bye for now.